What is an investment property interest rate? Have you ever wondered how the interest rate on an investment property can affect your real estate journey? Let's break it down together. An investment property interest rate is the rate lenders charge on loans used to buy or refinance properties meant for investment, like rental homes or properties for appreciation. This rate plays a big role in how much you will pay over time and how profitable your investment can be. Typically, investment property interest rates are higher than those for homes you live in. You might find them to be about half to a full percentage point higher than the rates for primary residences. Why is that? Lenders see investment properties as riskier. They worry that if tenants do not pay rent, you might struggle to make your mortgage payments. To cover this risk, lenders add a premium to the interest rate. Several factors come into play when determining these rates. One key factor is how the rates are linked to the yields on 10-year United States Treasury bonds. These yields reflected the overall economic climate and influence mortgage rates. Another factor is investor demand. When more investors want mortgage-backed securities, it can affect the rates lenders are willing to offer. Your financial profile also matters. If you have a higher credit score and lower debt, you may qualify for better rates. On the flip side, if your credit score is lower or your debt is higher, you might face steeper rates. Lenders also add a risk cushion to the interest rate for investment properties. This cushion varies depending on the lender and the borrower. For example, as of mid to 0 to 5, the national average for a 30-year fixed mortgage rate for primary residences is around 6.9%. In contrast, rates for investment properties can be higher by about 0.5 to 1%. Understanding investment property interest rates is essential for real estate investors. Higher rates mean higher monthly payments, which can cut into your rental income and overall profits. It's important to carefully evaluate these rates, considering your creditworthiness and the potential income from the property. This way, you can ensure that your investment remains financially sound. In essence, an investment property interest rate is the mortgage rate applied to loans for properties bought for investment rather than personal use. It is typically higher than rates for primary homes due to the increased risk perceived by lenders. Factors like economic benchmarks, borrower credit, and market demand all influence these rates. Real estate investors should take these rates into account when planning their financing to achieve the best investment results.